Hi, Beau. My partners and I have been working with a local bank trying to get SBA financing. We are getting pushback from the lender saying that although the franchise is in the SBA Franchise Directory, they only have 13 franchisees and they're wanting us to come up with more down payment. They say this is a higher risk. Any ideas or solutions that may work for us? Thank you, Nate.
So Nate, and so the big thing on this, Nate, is that's accurate. We've talked about this on a previous episode, and it's an emerging franchise concept. Well, I'm thinking it's emerging. It could be around for 15 years. It just is slow growth and not a big franchise, right? But so at the end of the day, depending on what industry, it's going to be scrutinized because listen, it doesn't have a proven record. If there's a franchise concept that has 1,000 units, right, they're established. Now, you doing your due diligence, you're going to jump into the FDD and see if there's any lawsuits. You're going to go through. There's 23 points on the FDD. You're going to go through those and make sure whatever concept you're looking at is kosher, essentially. But to answer your question, when there's a concept that you're having trouble financing because you're getting pushback from a lender, the biggest thing to do is to find a lender that likes that vertical. So that's what we do. We identify lenders that like that franchise concept or that vertical. Maybe they haven't financed this particular concept, but they've done others in that vertical. So that's the real key. So the problem, what I see often is that you're going to go to one bank, your local bank, and you're going to, put your application in, and you're going to like gotta be at their mercy. Whereas as you work with a commercial mortgage advisor, we take it to multiple banks. Now, it doesn't mean we're submitting a full file, but what it means is we're having a high level conversation to multiple banks and non-bank SBA lenders, and we're trying to figure out which one of these banks is the most likely to move forward with this with the highest leverage and the best rate. And typically the rates are Wall Street Journal Prime plus your margin. The margin is negotiable. The Wall Street Journal Prime is a floating rate that's not negotiable. You put those together, that's your fully indexed rate. So our job as a commercial mortgage advisor is to navigate you through the process, find the right lending institution with the highest leverage. Typically, not always. Some people have a lot of money and they put more down. But we want to get you the best deal with the best margin and make it a win-win. So that's what we do. And the best part is that we don't charge you a fee for that. We're actually incentivized to bring deals to these banks because they want more SBA deal flow. Because a lot of banks that are in the industry, they like making SBA loans because a portion's guaranteed. So it's a win-win for you. It's a win-win for me. I get more business, and it's a win-win for the bank that we work with. So feel free to book a call below, and we can discuss the project in detail and see what we can do for you.
Hi, if you'd like to book a call with me and discuss SBA financing, whether it's a 7A or 504, or you just don't know where to start, maybe it's a startup business, you're buying an existing business, you're buying a franchise, you're building a new office building, you want to expand your existing business, we have multiple solutions. I can walk you through the 7A and the 504 and the SBA loan process. And if you have any other questions on any other types of financing, I'm happy to book a call with you. The link's below. Look forward to seeing you soon. Hey guys, Beau here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.